All right, guys. So this video, I'm going to talk about take profits. So after you find a entry, whether it's supply and demand, market structure patterns, breaking retest moves, um, just understand that you have to have your key levels marked up. So let's zoom out. So like my key zones and my key levels. Yeah, I can draw a zone in here, but as of right now in this chart, I'm not. Some places I will. Just depends on the area or whatnot. You know what I'm saying? So even here, like this was this right here was a major area of understanding. Um, you know what I'm saying? Supply and demand zone area. So like this is a supply and demand zone area as well. So just because we have imbalance here, we had price going crazy down in the downtrend. Boom, boom, boom. It bought up like crazy. This is not really an order block, but it's more so of a imbalance this saying right here. So, you know what I'm saying? This would have been a valid entry. This would have been a valid entry right here. And you don't have to always be on the 4-hour time frame. I can find these imbalances on lower time frames, like 1 hour. I can find imbalanced moves. You know what I'm saying? You always want to be able to see these imbalanced moves. So like, ooh, so even like here on the 1 hour, like you can see there was a mitigation imbalance move right here. So this would have been an actual downtrend imbalance move. So supply and demand was created right here in this area. You had supply and demand, and then what you would have did is you would have just caught that imbalance move right here. This mitigation had a sell limit sitting right here ready to activate. This would have been a actual short position. So the short would have been a short position. Last high was like right here. This little area right here. That wick was the last potential high. So and then take profit is my key level. So I always find your key levels. So as you can see, my key levels are already here and whatnot. But if I was looking at this, all I had to do was just look back. Literally just look back. You know what I'm saying? Look back for what price was respecting it at the most. You know what I'm saying? Like right here, you can see price rejecting here in this area. So like boom, 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 boom. So this is more so of a valid key level for imbalance anyway. You know what I'm saying? It's imbalance. So just imbalance and take profit. So take profit would have been right here just because that was a key level. So let's type this up real quick. So take profits are key levels in the market. So take profits are key levels in the market based off of your analysis. So I'm gonna type that up too. Based off your analysis. Wow, it's playing with me today. All right, analysis. All right, pretty late right now. It's about 3 a.m. I'm doing this. You know what I'm saying? Knocking it out for y'all. All right, so here we got our sell limit. So this is a short position. So we're looking for about to the next major key level, which is right here. We're looking at about 219 pips. And this is on the 1 hour time frame. So what price is going to do is price is going to buy back up to this level. For example, price will buy back up to this level wicked. You know what I'm saying? Boom. And then wait for that next 1 hour candle because we're on the 1 hour time frame for some bearish momentum. So price is going to do whatever it's due, work its way all the way back down to hit here. That'll be our take profit. All right, so let's play it out. Boom. So what's price wicked? You have to wait another hour for this next candle to actually see some movement back down to our take profit level. So let's play it. Yes, this is a buy limit. It's cool, but it's not really on a valid support. So price is gonna always go get that major key level. So boom, take profit would have been hit just because we saw supply demand right here in this area. So that's one way of doing take profits in the market. And that's just imbalance on a 4-hour time frame. You know what I'm saying? So that's just one way of looking at it. What do we have going on here? All right, so here we had another downtrend. We had an imbalance like right up in here. So I'm waiting for price to come back to that key level. And we're looking for another short position because this was the downtrend. So this is just downtrend moves that I'm just looking at for take profits. So after you put it all together, you just look for the entries. So you can use imbalance as one. You can use market structure on lower time frames. So just understanding that supply and demand is on all time higher time frames. So for entries, supply and demand can be found on all time frames for entry. Market structure patterns like W's and M's can be found on lower time frames for better results. You can also use higher time frames as well for market pattern structure. So this is I would say like use lower time frames like 5 minute for like double bottoms. So like as you can see like right here, this is a perfect double bottom on a 4-hour time frame. But you know what I'm saying, you would have had to actually take the entry like right here. You have to know that you're getting in for the buy right here. So this would have been a perfect double bottom entry. So about right there, that would have been a perfect double bottom entry on the actual 4-hour time frame. But like I said, 5 minute, you could probably catch it a little bit better. But like I said, you can catch them on any time frame. So just remember that. Where did my little box go? Let me see if I can go back. Oh, okay, all right. Oh, snap. I'm tripping. All right. So for better results. So honestly, after you have those better results or whatnot, just start working with those time frames for you to be able to understand how to actually trade. You know what I'm saying? So for you to be able to take these good entries, you got to be able to see the market clearly. And in my next videos, I'm going to talk about psychology and how to be able to understand your confluence in the market. But just understand entries, supply and demand can be found on all time frames for entry. Market patterns can be found on lower time frames for better results. Higher time frames are cool, but like I said, for better results. Break and retest. For better results. So break and retest is better on lower time frames for better results. So just understand what I said about market patterns. Bianchi patterns is more so universal. It's just more universal in a way, just because it's just better. You know what I'm saying? Results. All right, yeah. So slash universal or whatnot. But just be able to understand that, like I said, like this would have been a perfect buy entry up to the key level. So even this trade right here, you would, you know what I'm saying, you would pretty much have your take profit listed at that key level. So I can delete, let me delete this one for a second so y'all get confused. Boom. So this would have been the perfect take profit. This would have been 275 pips. You know what I'm saying? For that drawdown, let's say you got in like right here. Like I said, you should be getting in on the if you seen price coming back down and retesting this key level or the support right here. So yeah, that's about, on a higher time frame, that's about 46 pip drawdown. It's perfect. But if you go to a lower time frame, you look at this entry, like the 5 minute, you can see pretty much what's going on better. So what price really did was it came like, regardless, this right here, you know what I'm saying, was definitely a strong fake out move, but it was a tweezer top. So you probably wouldn't even seen this. You would have been in a trade just knowing that, all right, I'm in for a buy, so I'm just waiting. So you just wait, you know what I'm saying? You wait. So you got 5, 10. So in 10 minutes, people would have got psyched out because this shit was in drawdown for 46 pips. But if you look at your risk to reward, your risk to reward is pretty much gonna be better based on, like, how can I say, this was about 283 pips for about 58 pip drawdown. So would it been like 58 pip drawdown? That's not, I ain't gonna say that's a bad thing, but look at your risk to reward. So if you trade with low risk on these type of trades, if you're building your account, you can hold within that drawdown, still make a lot of money. And I get into in the actual next video risk to reward. But right now I'm to show y'all take profit, and the take profit would have been the key level. So you know what I'm saying, market structure patterns, you kind of get better entries on lower time frames, higher time frames. You just see higher time frames, you could see price breaking down, but the thing is, you low key want to wait for price to close above. So if you see the double bottom on the 4-hour time frame, you want to wait for price to close above. So when I say close above, this 4-hour candle, you could have got in on the next 4-hour candle. So let's watch it. All right, so that trade would have been a bad double bottom trade. Cool. So now we get into the good stuff. So this is where you lose. I did that on purpose because I want people to understand how you can lose in the market. So for one, you should never, 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 never take a trade, you know what I'm saying, that's like this. You wouldn't take a trade like this just because what happened was on a lower time frame, yes, price, you got in for the buy. Hold on, let's say, all right, so you would have not got in for the buy right here. So this is why I say lower time frames are way better. So this is the whole double bottom right here. I'm telling you, this is the whole double bottom on the 5 minute. It just looks different right now, but this is the whole double bottom. But this is on the 5 minute double bottom. But this is the real double bottom. This is the actual W that you look for in the market. But here we have, you know what I'm saying, head and shoulder, inverse head and shoulders, inverse head and shoulders. So this is a valid entry for a buy. So when you have inverse head and shoulders, you get in for a buy on the right side. So this would have been an actual perfect entry right here. You always take the right leg for an entry. So this would have been your actual entry. Hold on, this thing is messing with me. right here. So this would have been your entry level. So usually I always take the entry on the support level. So if I see an inverse head and shoulders, I'm actually taking my entry maybe like down here on the support level. So I usually put it like on the body. That would have been my buy entry right there. I would have jumped in for a buy, literally. So just by me getting in for a buy, like literally, like I'll say like right here, honestly, on my line, I can't move it because this thing is messing up. It's playing with me. So yeah, I would have got in for a buy here in this level. This would have been my long position. And then my take profit would have been that key level up here. So this would have been my buy position on the first leg. So this is why I encourage y'all to be able to trade on the lower time frames, because you get your entries better. You can see the market way better on the lower time frames. You can see head and shoulders better. You can see it touching your key levels. So you always mark up in the previous video before, you mark up your chart on the higher time frames, you take your entries on the lower time frames. Do not take your entries on the higher time frames. Me personally, yes, that's a beautiful 4-hour double bottom over here. Hold on. Yes, this is a beautiful double bottom right here, which is good, but it was too much drawdown right here, and that's for the main reasons because we about to find out why it was too much drawdown right here. You feel me? 58 pips is a lot of pip drawdown, especially that's why I don't trade on the higher time frames, because when you trade on higher time frames, you have to use low risk. But you can take sell limits, supply and demand on higher time frames. But like I said before, I had wrote it out for y'all. Interest can be found on, you know what I'm saying? You know what I'm saying? Pretty much entry, supply, and demand can be found on all time frames. So supply and demand, you would have found that on all time frames. So supply and demand would have been in balance. But market structure patterns like W's and N's could be found on lower time frames. And also universal, but lower time frames for better results. So like this is a market structure pattern. It was too much drawdown. We would have got stomped out. You know what I'm saying? It was just bad trade. But on the 5-minute, for if you're looking for market structure patterns or whatnot, you got multiple entries you can find. You know what I'm saying? Multiple entries you can find, like best entries in the market. So like here you had you had an inverse head and shoulders. So just by having inverse head and shoulders, boom, risk to reward at this key level. You had about, let's say, 236 pips for about, let's say, we got in right here, 14 pip drawdown. 14 pip drawdown. Come on now. That's very, very good. So let's say we got in right here. And then my stop loss is right here. Boom. And then my take profit is the key level. I always told y'all take profits are key levels. Remember that. So boom, we're looking at about 249 pips. 249 pips for only about 10 pip drawdown. That's it. A 10 pip drawdown. So like just look. Let's watch this. We automatically assuming we got inverse head and shoulders. So here we got boom. First leg, price selling down, boom. Hit the support, bought up, came back down, made a strong head. So in this case, you know what I'm saying, you gotta wait till you see the pattern before you take the entry. So you just gotta be patient with the market. So here you see we got a pattern, you know what I'm saying? Once you have that pattern going on, you wait for the entry. So I automatically assume, okay, that support here is gonna have to come back down right here and hit that next support level, because boom, you got 1, 2, 3, 4. You got 4 touches. You know what I'm saying? So you would have got in right there. Price would have wigged it. Boom, you could have dropped a nice little clean risk management lot size and made a lot of money. So at this point in the market, you automatically knowing that price is gone. You feel me? Price is gone. So as price is buying up like crazy, all you gotta do is sit back and wait for price to hit your key level. That's it. And your key level is a key level because you got it on the higher time frame. Do your analysis on the higher time frame, go to the lower time frames, and then you'll be able to execute trades and you just ride them up. People say it's a scalp. No, it's not a scalp. It's just being able to see the market clearly and being able to catch the full moves instead of getting in on the higher time frames on those big, full, strong momentum moves where it's so much drawdown and you got to hold for a long time where you can just get in knowing that you got a solid position and you in blue. Like literally, you in blue. Just watch. That's what price will do. It'll look like it's selling, but you gotta know your confluence. You gotta know where price is going, and price is always going to that next key level. Let's speak up just a little bit. On autopilot, your entry right here, you good. Double bottoms, perfect double bottom. This is where you could have got in for a re-entry at right here. Perfect double bottom re-entry. That was the W. Could have got in somewhere up here on the neckline and then caught another entry for the buy. Then we had supply and demand, smart money right here. Price came up, another entry for a buy. Just know your confluence. Oh, price missed it by an inch. Okay, cool. You could take profit. You know what I'm saying? You would have took profit. Or actually it hit it. I'm sorry. I can't see. So price hit our key level. That's why I take the key level over anything for my entry. So also key levels, key zones actually are better for take profits. Just understand that. And I always just remember that. Just remember that. Key levels is just more solid. If you can drop a key level, drop a key level. You know what I'm saying? If you can drop a key zone, if it comes that close, just go ahead and close out. But yeah, and getting to the next video, we're gonna go over risk management, and then we're going to psychology